Morning, Steve Freed in Chicago with the morning grain comments. Well, overnight we started out beans lower, corn and wheat lower. Beans bounced a little bit. Now they're back to being lower again. They're down about a nickel. Corn's down about 2 cents. Wheat's down about 4 cents. Friday going home, I think the market was worried about cold temperatures across the U.S. Northwest and the impact it might have on the bean and corn crop, but maybe more importantly on the quality of the bean crop. Didn't seem like it got as cold as what the market was afraid of, and that might have caused some early resistance in the beans. Other than that, the market's going to be watching to see just how much demand's underneath the market, get verification of harvest yields as we move the harvest along. And then also the Chinese are in Milwaukee today signing their annual frame contracts to buy beans from the United States. And that could offer some support to the meat market on the announcement of how much they buy. This is all part of the export sales that they normally take. It's not expected to be anything addition or offer any support to the market. As far as the weather is concerned, we've got some warmer temps this week. The weekend might be a little wet in parts area of the Midwest. The following week could also be warmer and drier. This should help maturation and harvest and get an idea of what yields are going to be. Traveling in central Illinois yesterday, I did see a little bit of what is called SDS in the beans. It's called sudden death syndrome. It affects the leaves and stops the leaves from growing. And I don't think it's early enough to cause a big yield, but I'm certainly people are going to watch it as far as its impact on yields when they get into the harvest. Market still thinks that the final U.S. corn and soybean crop is going to be bigger than what the USDA said in September, and that could add to the carryout. Outside markets, dollars higher, most commodities are lower. The Bloomberg Index is the lowest it's been since July of 2009. OECD announced that they are lowering their estimates of economic growth in U.S., in Europe, most of the globe, and keeping China relatively flat. And this is raising some concern about commodity demand. There's also some data out of China that suggests that their economy is slowing down and maybe they need to step up and step in and stimulate their economy. Finally, this week, the U.S. Fed will have their minutes, and everybody's going to be looking for the terminology that suggests that they may start thinking about raising interest rates down the road. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.